In a world where nations rise and fall, one force has shaped destiny for thousands of years. And today that force is reaching a critical point. Welcome to It's Financial History 2. In 1929, America witnessed one of the most devastating economic collapses in modern history. The stock market fell 89% over 3 years. Unemployment reached 25%. Banks failed. Savings evaporated. And it took a full quarter-century for markets to return to their pre-crash levels. The pattern repeated in 2008. The housing bubble burst, triggering the Great Recession. Stocks fell 57% in just 18 months. Unemployment surged and retirements were wiped out. Recovery took 5 years, but 2025 stands apart. For the first time, stocks, bonds, and real estate are all declining at the same time. Economists call this phenomenon the everything bubble. And when every major asset class falls together, the historical safe havens no longer exist. Today, valuations in equities rival 1929 and 2000. Housing is more overvalued than it was in 2008, and U.S. government debt has reached a level where traditional tools, interest rate cuts, quantitative easing, and bailouts can no longer operate without severe consequences. The S&P 500 trades at nearly twice its historical average. 7 companies make up almost 1/3 of total market value. Nvidia alone trades at valuations exceeding entire national economies. This mirrors the speculative mania of previous bubbles, but now magnified by concentration risk. Real estate tells a similar story. Residential properties are 50% above long-term affordability trends, far surpassing the 2008 peak. Commercial real estate faces 45% vacancy rates in major cities, and refinancing at triple the original interest rates is pushing buildings into default. And the bond market, the traditional safe asset, faces pressure from historic levels of federal debt. Interest payments exceed $1.2 trillion annually, the largest line item in the federal budget. Multiple indicators, from the inverted yield curve to rising consumer delinquencies, point toward recession conditions. The window identified by economic models spans November 2025 to June 2026. History is not just rhyming. It is repeating, but under conditions that are more fragile, more interconnected, and more leveraged than ever before. Imagine waking up in a world where every financial warning light is flashing red, and no one is slowing down. This isn't 1929. This isn't 2008. This is something far more dangerous. In 1929, only the stock market collapsed. In 2008, only housing collapsed. But in 2025, everything is falling all at once. Stocks, bonds, real estate, debt markets, banks, consumer credit, all intertwined, all cracking. The numbers feel impossible. The S&P 500 stretched to valuations seen only before the 2 worst crashes in history. 7 tech giants holding the entire market on their shoulders like fragile glass pillars. Nvidia valued higher than the economy of an entire nation. Real estate inflated 50% above trend, larger than the bubble that nearly destroyed global finance. Commercial buildings hollowed out, 45% vacant, bleeding money as they attempt to refinance at triple the interest rates. And the government? It's suffocating under $36 trillion in debt. Interest payments alone exceed the GDP of Mexico. There's no rescue coming. Not this time. The Fed can't cut rates, they're already low. They can't print money, it would trigger runaway inflation. The government can't bail out the system, it's already drowning. Every major indicator, the inverted yield curve, soaring delinquencies, insider selling, Buffett's cash hoarding, points to one conclusion: the crash window has opened. November 2025 to June 2026. And when it hits, it won't be a single explosion. It will be a chain reaction. One failure setting off another and another, until nothing is left standing. The question isn't if, it's when and who survives the fall. Across American history, financial crises have devastated lives, but never like this. In 1929, most families didn't own stocks. They suffered through unemployment and hardship, but very few saw their life savings erased overnight. In 2008, families lost homes, jobs, and retirement dreams. But government rescue plans eventually stabilized the system and allowed people to rebuild. But 2025 is different because more Americans are exposed than ever before. 58% of households own stocks, mostly through retirement accounts. People who worked 20 or 30 years to save for the future now face the possibility of watching everything disappear in months. Homeowners who bought in the past 3 years, young couples, first-time buyers, new families are at the highest risk of going underwater as prices fall. Small businesses that form the heart of communities won't survive a collapse in spending and credit. The restaurant on the corner, the family-owned shop, the local mechanic. They'll face a financial storm they cannot escape. And for millions of young adults entering the workforce, the world they expected to find simply won't exist. Job postings will vanish. Career paths will stall before they even begin. A decade of potential earnings may be lost. People close to retirement will be forced back into work. Those already retired will see their portfolios collapse 50 to 70% and realize the money they were counting on will never return. This is not just an economic crisis, it's a human crisis. A generational crisis, and its impact will echo for decades. In a world where history is repeating itself, but with higher stakes than ever before. Narrator voice, 1929. The stock market collapses. 2008. Housing implodes. But in 2025, everything collapses. Not one bubble, not two, 3 bubbles detonating at the same time. Cut to fast montage. Stocks hitting historic valuations. 7 giants controlling the entire market, empty skyscrapers, banks teetering, debt ticking like a bomb. The Federal Reserve is out of ammo. The government is out of money. The world is out of time. This November through June, the window opens. The one economists fear, the one they hoped would never come. When the first domino falls, a missed earnings call, a failing regional bank, a geopolitical spark, the cascade will begin. And once it starts, there's no stopping it. Margin calls. Bond collapses. Housing freefalls. Bank runs. Unemployment surges. A nation on the edge. This isn't fear. This isn't speculation. If you like this video, don't forget to drop a like and subscribe for more content.